All right, so you're thinking about expanding your portfolio away from cryptocurrency or maybe into some other things, and you're thinking, hey, maybe it's the stock market or maybe digital assets. Today we're going to dive into that. My name is Paul Barron. Welcome back to TechPath. Let's take a look at where digital assets kind of differ from what we're seeing over in the crypto ETFs. And the pure play, simple solution here is digital assets are kind of that one step further into companies that are moving either in the crypto space or they're making particular advancements in terms of their overall strategy in what they do. And this would be companies like, a Square would be the perfect example, or companies like that that are really kind of in the opportunity for you to invest in without investing in crypto. PayPal, of course, would be the other one that kind of falls into this. But I want to jump to a story over on ETF Stream that really kind of breaks this down pretty simply on where the performance has been, and also, should you jump into this if you're trying to diversify. So basically, this references Cathie Wood, who is the CEO, of course, of ARK Investment. You guys know because she's just got so much movement here. She's been trying to do a Bitcoin ETF for quite some time, along with the Winklevoss twins, along with several others. You can see there 6 different other ETF applications, all in the wait. And of course, that's fine. There's nothing wrong with that. The rise of crypto has definitely kind of created this new investment asset class that a lot of people are really moving to, but the volatility in many cases starts to scare people off, and that's maybe where this kind of comes into scenarios. And I want to jump to this chart, the performance of selected cryptocurrencies and kind of where this has gone. Even if you're in crypto, unless you were in pre-2017, you're still somewhat, depending on where you invested in this big lineup right here from 2017 to where we are right now in 2020, which we still think this is still in the bear market, even though we are in a downtrend from its all-time high. The main point I'm trying to make here is crypto is still a very profitable asset. The key, obviously, is when is your entry point? Did you buy at the 60? That's kind of the scenario that if you had purchased in the 50 to 60 range, maybe you're looking a little bit antsy and you're trying to figure out some other alternatives. So most banks and asset managers have kind of avoided cryptocurrencies in the 2017 boom, but now have embraced them mainly because for commercial reasons. And what I mean by that is a lot of asset managers now are getting a lot of pressure from people and their investors to start to move into whether it's blockchain, digital assets, overall. And when you look at this, that's kind of what's created kind of this overall frenzy in the marketplace around a lot of the big players that are kind of moving in this space. The combined market capitalization of some of these cryptocurrencies has breached 1 trillion, as you guys know. Given that primarily retail investors have mostly been the ones that play into this, the key here is it can be much more lucrative than dealing with fee-conscious institutional investors. So that's kind of the reason that this market entirely exists. It's kind of the socialization or the democratization of investment asset classes, such as something like cryptocurrency that right now still highly unregulated. And with all the different tool sets that are out there in blockchain, what you can do with cryptocurrencies is mind-boggling and really where it can kind of go. And if you look at kind of just the overall market cap of these currencies, Bitcoin, Ethereum, et cetera, but if you look into digital assets and the performance of those particular projects, it gets a little bit different. So they're basically selecting all ETFs traded in the U.S. that are focused on blockchain, the blockchain industry, which is less than 10 securities currently. These have a combined market capitalization of about $6 billion. So 80% of these assets are managed by 2 ETFs. So that's a big one. The average management fee on this is 76 basis points. So that starts to play into this. The other thing they did in this research was they created an equal weighted index out of ETFs compared to the performance of the Nasdaq Top 100. So when you did that, or when they do that, and they compare the ETFs over time, the actual Nasdaq 100 performed less than the ETFs, the digital asset ETFs. So this was mine. I was blown away by these numbers. When you take a look at this, the digital asset ETF index, you can kind of see the blue and green. Blue is the digital asset. Somewhat in pre-2016, pre-2017, when Bitcoin and cryptocurrency really started moving, these were pretty much tracking all along. And these are companies that are invested in fintech and kind of the digital ecosystem of where technology is moving when it comes to the monetary system. And then, of course, cryptocurrency gets in here, and all digital assets start to rise, primarily because in most cases they're plugging in to the cryptocurrency and or the blockchain space in some way or another. And that could be everything from wallets to things like what Robinhood is doing, PayPal is doing, Square is doing, all these kind of companies. And we're probably going to see a litany of other companies moving into this direction, especially in the banking industry. Maybe some of the digital banks that are out there, from Ally and those types of banks who have really kind of targeted the unbanked in going in this direction. So I think that's going to be a huge opportunity. Some investors, though, might assume that strong performance in the digital asset ETFs is explained by the exposures to cryptocurrencies, like I just explained. Although ETFs have a direct exposure to Bitcoin, this has all been based off of this whole GBTC, which is, of course, the Grayscale Trust. And that's kind of where the action has been kind of identified, though it does kind of become apparent that when you compare these over with equal weighted portfolios, the percentage of opportunity here is unbelievable. The former increased by 2,000% year over year, also driven by things like Dogecoin, and the other was only around 64%. So quite a bit difference in terms of how some of these asset classes are performing. And I thought this was interesting. There is a positive exposure to the momentum and the size factors, which is expected, given the ETF constituents that are out there right now. When you look at this chart, factor exposure of digital asset ETFs to US stocks, equity, and factors last 12 months. You can kind of see the movement here. S&P 500, value versus size, the quality, the low volatility, and then really kind of the overall performance. I think the key here that they are trying to do with this kind of research is saying that if you're not comfortable with investing in a cryptocurrency directly, let's say Bitcoin or Ethereum, or even going into a trust or even an ETF in some of these other markets like in Canada and Europe, where there are some available ETFs that are all linked to cryptocurrency, these digital asset vehicles are the very next best thing. And that's, of course, going to be ETFs like Cathie Wood's ETF and many others that are starting to move in this direction. We've had several people on this show talk about these digital assets and what this could mean in the future. So the key here is that you don't have to be all in on Bitcoin to participate in the ecosystem. Digital asset companies, and we're going to do a video on PayPal, but if you follow what is happening at PayPal and also over at Square, I think the two companies that are pretty much going neck and neck for, I think, the scenario of them being able to really go all in on either digital wallet access, crypto, and of course, the ability to start utilizing tool sets that really kind of changes the entire finance and banking ecosystem. Those two companies, Square would be my number one right now in terms of investment. I think that is the one key one. In fact, I think it's the number two position still on Cathie Wood's Innovation Fund, which is the ARKK fund on the ETF side, which full disclosure, I'm invested in. And I still think that is an unbelievable company where Jack Dorsey, who's really trying to, their CEO, trying to reinvent how banking and potential digital currencies may occur in the future. So stay tuned right here, because this is going to be one of those things that I think we'll continue to see more and more companies cutting loose both innovation, but also a lot of companies and big asset managers really looking into these, which are going to drive the opportunity for these to perform in terms of return for you and investors. So that's going to be kind of the cool thing. Remember, this is not investment advice, but we do, kind of hopefully give you guys at least some direction in going in and doing your own research and kind of diving into maybe the next thing for you to do. We want to do this with some other more technical aspects of cryptocurrency because there's a lot of other opportunities out there other than just buying a token. And also, whether it's yield farming or you go into things like, staking, which I think some of you are probably already in based on the comments. There's a lot of those kinds of components that I think really are going to be interesting as you continue to build on your whole digital asset and crypto journey. That's the big thing here. If you're a traditional investor, this is really kind of what's happening right now in terms of an evolution that is occurring in the traditional asset class of stocks, bonds, ETFs, et cetera, is that the digitalization, tokenization of all these things are starting to become reality. Make sure if you want to reach out to me, you have an idea for the show, or you want a topic that you want us to kind of cover, just hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.